If you currently have RRSPs, RESPs, LIRAs, or even a TFSA, then you owe it to yourself to give me 90 seconds of your time right now to introduce you to the latest innovation in registered funds investing. Hey, listen, if you're looking at your registered funds at all, I don't have to tell you that things aren't going well. Registered funds accounts, on average, over the last 5 years, are earning people less than 4% return. And you just have to look at your own registered funds to see that. Canadians have enjoyed the tax benefit of creating registered funds accounts and saving for retirement for decades, but very little innovation has happened over the last 30 years in the space. That means that most of us only have one option. That's to put our money with a mutual fund advisor and get them to invest the money for us. But doesn't it become frustrating when you see those annual returns and you're only making 3-4%, but your mutual fund advisor is getting paid significant amounts of money and living the high life? Well, in the last 5 years, the Canadian government has launched a new strategy for registered funds investing that is working and getting people significant returns. It's called a mutual fund trust. Average mutual fund trusts are getting registered funds owners 15% returns per annum. So what's the difference between a mutual fund trust and a traditional mutual fund? Well, the mutual fund trust is owned by the businesses that the mutual fund is investing in. Think about this for a second. The way a mutual fund works right now is your mutual fund manager looks at portfolios of companies and invests your money in portfolios that are offering stable return. But did you know you have a chance to invest directly with those companies with your registered funds and get significantly higher returns? When I discovered this strategy, I knew it was the perfect strategy to use to build our network of high-end cottage resorts right across Canada. My name is Ken Dunn, and I'm the founder of Cottage Dream Vacations. We are a real estate development company that is right now building high-end cottage resorts right across Canada. And we've decided to use a mutual fund trust to raise the capital we need to build our projects, because at the same time as we're building these resorts, we're able to help millions of Canadians to maximize their return. Very simple how it works. You're going to take that same registered money and invest it in a mutual fund trust that we own, and we're going to administer that for you. Now, before you get skeptical, don't worry. We have securities lawyers on staff. We have exempt market dealers on staff. Your money is as safe with us in the mutual fund trust as it is in your mutual fund. The only difference is with us, you're going to see 15% per year return. So what the mutual fund trust allows us to do together is you can put your registered funds into our business, and we're going to use that money to build these resorts. We're going to give you contractually obligated returns. Now, your money is actually protected against the assets of the business, against the real estate and the business. And these hospitality businesses, they earn 50% net profit annually. Because of those high net profits, we're able to give 15% returns to people like you that invest your registered funds in these opportunities. Now listen, there's a lot more I'd like to share with you about this. So I want to invite you to a live masterclass that we're doing, where I'm going to invite our securities attorney and our exempt market dealer to join me, and we're going to go through all of the details. We're going to show you how you can invest your registered funds into this project and get yourself a 15% annual return. And once we give you back that money, we'll have another project that you can put it right into. And on all the projects you invest in, you're also going to participate in a 2% royalty paid for the next 15 years. Anyway, I hope I've got your attention. Yes, I know some of this will make you skeptical. People will say, how is our money protected? It's protected against the assets of the company and the real estate. In all of our projects, before we invite you to invest your money, the project is already going to be at least 50% complete, and all the funding is going to be figured out, so your money is safe. If you're tired of horrible returns for your registered funds because of those mutual funds, then take a couple minutes of your time, click on the Learn More button, and register to attend our live workshop, and I'll explain all the details there.